We're back on the air with our expert panel exploring the topic of financing a restaurant purchase on We Sell Restaurants. Join us every Saturday at noon for the inside scoop on what's happening in the industry. We want to satisfy your appetite for acquisition, feed the need for restaurant reality, and serve up a recipe for business success. We're joined by 3 expert guests today, and we left off with information about what these guests would be looking for from their clients. And I have a new question, and that is, I'm going to put each one of you on the spot and ask you to tell me, you've heard the sort of pitch from the other folks in the show today. What would you say is the biggest advantage that your form of funding has over the other 2 options? And David, I'll start with you. What's the advantage that Guidant Financial has in a 401k conversion over the other 2 types of funding sources we've been discussing?
Well, I mean, there's no question for me the number one reason why people utilize a rollover for business startup is because they want to fund a business with equity, not debt, and they don't want other shareholders or obligations. I actually think that both of the SBA and crowdfunding play a vital role in small business. But for our customer, the reason they choose that is because they want the ability to capitalize the business and not have the corresponding interest payments or obligations. So as our customers are generating their initial cash for the business, they're able to reinvest that as opposed to sending it off to a bank in the form of interest payments. One other advantage is the fact that because they are making the decision as to whether or not this is a good investment for their retirement plan, we don't discriminate at all about whether or not it has to be a new or existing business or whether it has to be a franchise or restaurant or an entrepreneurial startup. The individual gets to make those decisions for their own.
And David, also, isn't it one big thing is you don't have to repay your equity. I mean, people sometimes don't understand that, you can start a new 401k, but you do not have to repay that money on a monthly basis or any form of way. Is that correct?
Yeah, the important distinction to make is that this is an investment, not a loan. So if I bought stock in, say, Microsoft inside my retirement plan, there's no need for me to liquidate that on a monthly basis or what have you, right? I can hold that as long as I deem it necessary and to realize that investment. The same thing occurs here. The individuals are buying stock in their business, and there's no need for them to pay that back in monthly installments. When they sell the business down the road, the shareholders will yield the return on that investment, and the 401k will then recapture its investment plus any of the gains.
Good. And Sylvia, you heard David's comments. And then what would make you different than a 401k conversion? What would you say is the best advantages of a SBA financing through a more traditional bank?
Well, I think that, like he said, if you used them in conjunction with each other, probably would be a great idea, because we are looking at a business does have to, most of the time we're looking at businesses that are already existing. So we're looking at some proven cash flows. So we may come in and say, listen, you're asking for $300,000 and we can only lend $200,000. So you really need to go somewhere else and get that $100,000 because that's all that's going to cash flow. So that may be a great idea. Or also to have some of that in the background, because we're going to lend initially, but you need some working capital. So not all businesses go exactly as planned. If you have a shortfall and need some additional money, maybe you go this route, or because we're going to look, do you have some fallback in case things don't go perfect? We're going to look that you have liquidity, or do you have some money in a 401k that if times got really rough, you could go get
basically you're looking for a secondary source of repayment.
That's
in case things go sideways
correct.
A little bit.
Absolutely. We're going to look that not all businesses go exactly as planned, and so you do need to have some working capital for that fallback.
Okay, so Alex, tell us from Foodstart.com's perspective, what do you think is the advantage of your method of restaurant funding versus the other 2 that we've been discussing?
Well, I do think they are complementary to one another. That said, I do think we offer some advantages. For restaurant financing is really more of a ladder, I think, and we're the first rung. So if you can't get your friends and mother to back your business, maybe it's not a great concept. That said,
that is a great point, and I'm sure that there is no one out there whose mother won't be behind their business 150%, or they better not be.
Yeah, but assuming you get those people behind you, then I think that gives a lot of people a green light for them to then say, okay, well, maybe I should invest in my retirement funds in this as well. And if they're willing to put their own money into it, then the bank is more likely to back them as well. And another place where we really differentiate ourselves, I think, is as a loyalty. We're as much a loyalty club as a financing source. So you're harnessing this group of people who now want to see you succeed, and that's a big deal for a local restaurant.
Alex, since you're kind of the newcomer on the block here, tell me a bit more about the profile of your clients right now that comes to your side. I mean, who is the typical guy right now that comes to your side and try to fund the project?
Right. So we have about half are existing restaurants, and about half are new entities. Of our new entities, about 60% are actually food trucks. Food trucks are difficult to finance. They don't require that much capital, and they have a more sort of more fashionable or hip reputation at the moment. So we're getting a lot of those kind of folks. On the backer side, the people who are supporting them, we actually did a lot of market research and did some national surveys. And we asked people who would be most likely to back a friend's restaurant. It turns out the typical backer is somebody who's male, age 25 to 35, has some college education and some disposable income, and who doesn't live in the Midwest for whatever reason. People in the Midwest are less likely to use crowdfunding than other regions.
Great information. Well, we want to thank all of our guests today. Guidant Financial, BB&T Vice President and Business Services Officer Sylvia Shiverdecker, as well as Alex Shushanoff, the founder of Foodstart.com. You guys have given our listeners great information, and we're going to wrap up this segment and move to a quick commercial break. When we get back, we're going right into our restaurant reality segment. That's the time where you get the unbridled truth about buying and selling a restaurant. We haven't sold hundreds of restaurants by being afraid of the four-letter words in the industry. That's right, the F word, fail, and the S word, sell. Catch our restaurant reality segment right after the break, where you're going to hear from our commercial sponsors. These are the restaurant brokers, Eric and Robin Gagnon, and you're listening to We Sell Restaurants. Stay tuned for our next segment.